Hi everyone, hope you're doing well. Karthik sir here. Today we are going to do the revision of a very important chapter in auditing, and that is chapter number 3, that is risk assessment and internal control. This chapter, in my opinion, is the core of auditing. So this chapter you have to do very, very well. This chapter, chapter number 4, chapter number 7, are very, very important for the CA final preparation also. So in CA Inter itself, you have to ensure that these concepts are very, very correct and it is proper so that in CA final you can score excellent marks also. Okay. Now let's do this. Let's go from the beginning. Let's start the revision part. Now, the first area, that is your understanding of the entity and its environment. So, how do you understand the entity and its environment? I think all my students will know this answer because this is their favorite answer called REOFINS. Okay, so applicable financial reporting framework, regulatory industry factors, objectives and strategies, financial performance, nature of the entity, selection application of accounting policies. Correct. So let's do it point by point so that it is easy for you to remember. Please let's do it. In your regulatory industry factor, we had seen something called as TREC. So TREC was in relation to technological development, regulation, energy supply and cost, competitive environment, cyclical or seasonal activity, and finally customer supplier relationships. And we are mainly checking the contracts. Correct? Remember the chart BD1A chart. Okay. Then after that, we had done the next area, that is your O, that is called objectives and strategies. In that, after explaining this area, we had done a small hand action, that is basically this, that is called business expansion, industry development, and new product. So business expansion, industry development, and new product. Okay, very simple hand action. Then after that, we had done something called as financial performance. So that is this point here. Then in financial performance, we did something called as KBC finance. So if you remember, key performance indicators, budgets, forecast, credit rating agency reports, and finally financial performance analysis. Okay. Then we did N, nature of the entity. In that, we did a code called SUTIN, structure and the way it is financed, operations, ownership, types of investments. And in this also we have done the examples, that is nothing but first the money will come, so financing and financing activities, then that money will be used for business operations, then we'll make our financial reports, and in that there will be an item called investments. So this is how we just ensure that the remembering part is done. Okay, and all these areas we had done the explanation in the class in depth. Now let's go further. Let's go to the next area. Next is your selection and application of accounting policies. So this completes your entire code called REOFINS. In my opinion, a very, very important answer. Okay, let's go further. Then we had done this important part, that is understanding of the entity is a continuous process. If you remember, we had that amazing story of rat and pole. Remember rat and pole story? Let's go for it. First is the risk of material misstatement. Second is materiality. Third is you climb, that is your accounting policies. Then after that you have the brother, that is related party transaction, and having a romantic walk with his wife, that is sufficient appropriate audit evidence. Remember Sai. Then finally the sister says thank you Anna. Anna is what? Analytical procedures. Correct. So that is how we completed this part. Okay, if you remember rat and ball story, you'll easily remember this answer. Okay, let's go further. We had done one more answer, which is part of automate environment, but I'll just say it here. We had done an answer called as how to understand the automate environment. That was nothing but 3 plus 3 plus 3, if you remember. That is information system purpose, version, location, architecture, interface. In-house was this packaged, outsourced, key person, CIO, CISO, that is Chief Information Officer and Chief Information Security Officer. Okay, so this is the part that we had done. Now, after completing this, let's go further to the next part, and that is we are done in relation to we'll do this materiality part first. Okay, then I'll take you to the risk circle control circuit part. Okay, let's do this materiality first. Now materiality, this is what we had done, and if you remember, we had done the performance materiality chart, which I think took in the class around 1.5 hours or close to 2 hours just to tease the performance materiality part. Correct. So performance materiality you should know very, very well, because that is a very, very important concept in auditing, and if you understand that well, you will understand almost all of the auditing concepts are aligned with materiality. So you will get all the concepts, you will get one by one, you will get the understanding of that. Okay. Now let's see here, my dear student. Let's see this. Please see here. Now materiality, the main concept in that is first is materiality and performance materiality concept clarity should be there. Next is you should do the reading of the materiality and audit risk answer. Now let's go further in the areas that can come as a separate question in the examination. Let's see this. Concept of materiality in the context of presentation of financial statements. Now, materiality, you will think from what angle? You will think materiality from the user's economic decisions perspective surrounding understanding and users as a group. So, as an auditor, you don't cater to individual needs of the users. You cater to the users as a group. Next is then after that, the auditor makes judgment about the misstatements and gives the reporting accordingly. Okay. We did a very, very important answer called factors that affect the materiality benchmark. If you remember, we had done a code called WOFNLI, that is volatility, ownership structure, financial statement elements, users attention, nature of the entity, life cycle, industry, and economic environment. So this is what we had done in relation to factors that affect the materiality benchmark. Next is what is the relevant data for chosen benchmark. So we had done this answer as well. Now relevant data for chosen benchmark was very easy. First is you look at the prior period, that is um, last year's data, or you look at the year beginning till today's date, that is called period to date. So prior period, period to date. Okay. Then you will have the budgets and forecast, that is about the future. You will keep the significant changes in mind, and you will apply it to the, you will percentage applied. Basically, you will take a any important figure in the company's balance sheet or the profit and loss account, and you will just simply apply a percentage. Okay. Now that was this basically relevant data for chosen benchmark. Next we had done is factors due to which misstatements of lesser amounts can be material. Now misstatement of lesser amount can be material is a very true matter, because sometimes the value of the item can be less, but it can still be material. So let's see at let's look at this part. Now understand this part properly. Let's see here. Please see here. Okay. It will come to this part. Misstatement or lesser amount can be material to influence the economic decisions of users when first law, regulation, or AFRF affects the user's expectation. And the second is disclosures. So if it is key disclosures required in the industry, like example, RBI can give key disclosures for banks, or IRDA can give key disclosures for insurance companies, correct? And you have separate disclosures, basically separate disclosure required in a given situation. Example, there is a fire in the factory. So separate disclosure is required. Then even if the amount is less, still that disclosure has to be given by the entity. Okay. Now this is basically the answer in relation to misstatements or lesser amounts can still be material. Okay. Let's go to the next answer in our main chart. And then the main chart you will see there on the right hand side in green we have written there revision in materiality. So when will you do revision in materiality? That is basically this answer. See, revision materiality as audit progresses. Revision can be done due to change in circumstances because of any new information that comes into the picture, or changes in understanding the entity and its environment. Okay. Also in revision, you will see what is the actual issue and what you had expected, that is anticipated, and the difference between that can be, uh, only if the difference in that is big. In that case, you will prefer revising the materiality benchmark. Okay. Finally, you will keep performance materiality in mind, and I think it is very clear that performance materiality can change. Remember, from 1 lakh we came down to 10,000, from 10,000 we came down to um, from 5 lakhs we came down to 1 lakh, from 1 lakh we came down to 10,000. So that performance materiality benchmark can also change. Okay. So performance materiality and the nature, extent, timing of further audit procedures. Further audit procedures, you know very well, line comes down. That is basically SA 330, response to risk is there. Okay. That completes this part. Last area, I told you it is not directly a part of materiality, but I included in this chart only, so that you don't forget this answer, which is an important one. See, auditor's assumption about users, the one which is in black below here. See, auditor's assumption about users. Now, what all can the auditor assume about the users is given in this part. Okay, so let's do this properly. Let's see this one by one. So everyone, please, here we have done a code called Mr. Kumjid, if you remember. Remember Kumjid? So just a second. Here it is. Okay, let's see this. So auditor determination of materiality is a matter of professional judgment. And what all can the auditor assume about the user? So we are done Mr. Kumjit. Okay, knowledge of business and economic activities. We are assuming that the users will have, the shareholders will have. Understanding of the financial statements. They understand the financial statement and they understand the concept of materiality, that the auditor cannot check everything. And auditor does the audit on the basis of materiality. Next is the users understand that in financial statements when they are made, then measurement is done of some areas where it can be on the basis of estimates or judgments, and it can be just a guesswork process. Example, your reserves for doubtful debts amount, or your life of the asset amount, all these are just estimate that you're making, correct? Finally, in the end, you don't spoon feed the decision to the shareholders. When you give your audit report, the shareholders are supposed to read that, or the users are supposed to read that and take their own economic decisions. Okay, that is basically this Mr. Kumjid. Okay, that comes to this part, auditor's assumption about users of the financial statements. Let's go to the next one. Let's see this. Now that completes for us the materiality part. So this entire chart very, very important in the class. Also, I had given you this chart, and this you should know properly. We had to use a lot of memorizing techniques for this also, and I hope this area is now sealed in your mind. It should be properly covered. Okay. Now let's go further. Let's go to our most important one, that is your risk circuit, control circuit. And I've put the basic numbering here so it is easy for you to understand. And then we'll do one by one. Okay, let's see this first. You have the company. Company has an auditor. Company, the auditor has to understand the company before he starts the audit work. So in that case, two things will come: understanding the entity and its environment, understanding the automated environment. Okay, and auditor has to, during the audit work, he has to understand the entity on a continuous basis also. Okay, so these three answers we had covered. If you remember, the first answer was the Uri of part. Second one is 3 plus 3 plus 3, and the third one is, if as you remember, the rat and pole story. Okay, now after that we go to the next area, that is the auditor has to do something as called as a risk assessment process. Now in every company you have the management, under the management you have the accounting department that is working. Now the accounting department has to ensure that the accounts are proper. If the accounts are not proper, it can lead to misstatements. So what are misstatements? How the entities records are required to be disclosed as per AFRF and how they have actually reported. The difference between these two is called misstatements. And if you remember, we had done something called as in the class APCD. APCD is nothing but amount, presentation, classification, disclosure. Whether how it is required to be done as per AFRF and how you have actually done, the difference between that is called as a misstatement. Now some examples of misstatement also they have given. If you remember, we had done a Jodi in the class. I'll just show the entire chart. 1 second, please wait. Okay, you just look at the top right corner, you will see the misstatement, and you will see there you have to see look at the difference between capital versus revenue, and vice versa. So basically, if an item is or a capital item is shown as revenue or a revenue item is shown as capital. Next is you have to look at the difference between FS and AFRS. So this is your first Jodi, which has 2 points. Next is any improper accounting, improper application of accounting policies or incorrect accounting estimates will come in this part. So these are the next 2 points. You will see that AP and AE basically. So your accounting policies and accounting estimates are these 2 points. 1 minute, just a second. Okay. So you have here, you can see your accounting policies and accounting estimates are the next 2 points. Okay. Next is regarding window dressing. Receivables you will check. You will any receivables means your debtors if they are shown at an escalated manner. If they are shown in an escalated manner, it means that there is window dressing going on. And inventory can also be escalated so that the profit figure is shown at a higher value. Next is you have secret reserve here. Secret reserve is basically when you are showing fake, you can show fake expenses and you can pay lesser taxes to the government because you're showing lesser profits. Because if you show fake expenses, your profit will be lower. Okay. Inventory can also be given in that secret reserve point also. You can say if you overstate the inventory, it will be window dressing. If you understate the inventory, it will be secret reserve. Okay. Let's go further to the risk chart. Very, very important in my opinion. So risk chart, let's do it one by one and let's ensure that this is done. Please see here. Okay, let's go further. Now in risk chart in the class, I take you to the main chart and I think we have done it in step-by-step manner. Similarly, we are going to do now, please see here. First of all, audit risk. What is audit risk? Audit is the risk of giving an inappropriate audit opinion. Then you have audit risk is equal to risk of material misstatement into detection risk. What is risk of material misstatement? It is nothing but inherent risk into control risk. So your audit risk is nothing but audit risk is equal to inherent risk into control risk into detection risk. That is your audit risk. Comfortable? Now, after that, we had understood what is inherent risk, control risk. We had done the examples in the class. We can go through the examples that I had given you. So where we had done inherent risk, control risk, I must have made you write something there. So there you will get the matter. Let's go further. If the inherent risk is high or the control risk is high, or if both are high, then the RMM is high. If the RMM is high, you have to put more effort, and that's why the auditor should do more work and detect more areas. If the audit detects more areas, the detection risk will be low, and that is the best way to do audit, where you are keeping the detection risk at a low level. Detection risk being low means the risk of not detecting something is low. It means you are checking more areas. It's a good thing. Now, detection risk. Now, in the new course, they have said here detection risk is made up of two things, that is sampling risk and non-sampling risk. Sampling risk is the risk that the auditor's opinion can be wrong because he's checking samples and not checking all the items. That is called sampling risk. Okay. And suppose if it is because of a human error basically means if the accounting department of the company gives us wrong data, that is called erroneous information, or if the auditor is not applying the right audit procedures, in that case you will understand that it is a human error. It is because of a person that mistake is happening. Either the management is giving you wrong data, so it is a management mistake, or if the auditor is applying the wrong audit procedures, then it is the auditor's mistake. And whenever there is human error involved, no, you cannot put the blame of doing the wrong audit or the audit opinion going wrong, you cannot put the blame on the samples. That is why when human errors happen, we call it as what? Non-sampling risk. We call it as non-sampling risk. Comfortable till here? Okay. Now, next one, let's see. At what level should RMM be identified in this? We had done FS level and the assertion level. Remember, FS level is pervasive and assertion level is concerned with TAD, transactions, account balance, and disclosures. Okay. Next area. For the purpose of identifying and assessing the RMM, what shall the auditor do? Auditor shall remember the action, identify the risk, then assess the risk. Now, identify the risk when you do it at two levels. Identify the risk, FS level, assertion level. Then assess the risk. Assess the risk side by side. What will you do? That is this. That is your analytical procedures, observation, inquiry, inspection, and then you have finally the reoffense part. Okay. Then finally you have this. That is basically what can go wrong, and finally you have this multiple misstatements and material misstatements. Okay. Now that completes your risk chart area. Now let's go to the further area, that is whether a risk is a significant risk. In this we had done the relative anti-story, and for the crash course student we had not done the relative anti-story because the relative anti-story was connected to a another story called relative uncle story. Okay, so you or fraud uncle story. So you understand that because that fraud uncle story was not covered in the crash course batch because it is not required. It's a very simple concept. That is why relative anti story I might have not done, and that is why I had given you all a code, and that code was from core, if you remember. So whether a risk is a significant risk in that the will do with the code from core, and the people who are doing with the story will also remember the story also. And I'll say it side by side. First is a relative auntie, a police officer comes outside our house, so she's checking a fraud case. And after that, when you see her face, she's a relative of ours, distant relative of ours. Then after that, you tell the auntie, why are you standing outside? Please come inside. So outside the normal course of business. Then you have your face measurement changes. Remember that is measurement uncertainty. Then after that, the 500 rupee note. Remember complexity of the matters. And last but not the least, you will get the recent development. Uncle goes around and round inside the washing machine. Correct. So similarly, when we had done in the code format, now I'll just tell the code that is from core, fraud, related party transactions, outside normal course of business, measurement uncertainty, complexity, and finally you have recent developments. Okay, that is how the flow goes. Okay, so this is the same answer, that is whether risk is a significant risk. So this is just what we completed right now. Okay, now next is identifying the significant risk. Can you have to identify, and it is greater for non-routine matter, that is for M2C2, if you remember, management intervention, manual intervention, controls not effective, and complex calculation. And finally it is greater for significant judgmental matters, and judgmental matters are of two areas, we'll see interpretation and assumptions. Okay, finally we have the last area called documenting the risk. Documenting the risk is this part. Okay, now this completes our risk circuit. Now let's go to the controls area. In controls we had done the meaning of controls. Tell me the meaning of controls. Very very simple than me. Controls, internal controls is a process that is designed, implemented, maintained by the TCLG management employees to obtain reasonable assurance about FOLA, financial reporting reliability, objectives, effectiveness and operations, sorry, effectiveness and efficiency, legal compliance, and asset safeguarding. Okay, same thing, purpose, same answer is there, called FOLA. Same thing, financial reporting reliability, operations effectiveness and efficiency, legal compliance, and asset safeguarding. Now next is what are the limitations of control. We had done hand action in the class, if you remember, so let's go for it quickly. First is internal control can only provide a reasonable assurance, lack of understanding, human judgment, management judgment, small entities, and finally we have the collusion part. Okay, last area we had this next part in this last area means in the first set, that is you have the components area. Components, if you remember, we had done a big different pattern which I'll do immediately after covering this part. I'll go there and teach you that. And in this components part we had done in the class, there are 5 components of internal control, that is control environment, control activities, risk assessment, information and communication, and finally you have the monitoring part. Okay, next area. So now this components part also has more depth and answers that I'll take you through. Let me just complete this first, and in this part 1 of this chapter's revision video I'll complete that internal control components also. Hold on. Okay, let's go on to the next one. See this, factors which are relevant to decide whether a control is relevant. Remember this answer, very very important one. Okay, so what factors will you check to decide whether a control is relevant or not? And if you remember, we had done this area for this. Just a second, I'll just show you that. Okay, so we look at these points. First is what are the factors we look at? We look at the business, we look at the size, we look at the complexity of the system, complexity of the operations. We look at the internal controls, specific controls. Finally, we look at materiality, risk, and legal and regulatory matters or legal and regulatory requirements. So if you think of this answer, you have to think of this uh, chart which you had made. Not chart, the placement of points was such that it was easier for you to remember. But you should be able to remember this. It's a very, very important one. Let's go further. Just a second, just a second. Sometimes you lose the track of this. Okay, so just a second. Let's go for it. Okay, so you can see on the left hand side in blue, you'll see there factors which are relevant to decide whether a control is relevant or not. Just a second, please wait. Okay, so factors which are relevant to decide whether a control is relevant. We just saw the answer. Okay, next one you will see here is understanding of the relevant controls. How will you understand the relevant controls? Evaluate the design of controls, tracing, transaction, observation, inquiry, inspection. Finally, you have operating effectiveness. Correct. Now after that, we have the next area that is in relation to what are the benefits of understanding. Very, very simple again from your BD1A chart. So in that case, we had seen, sir, we'll identify the potential misstatement, we'll identify the risk of material misstatement factors, and we will be able to design the nature, timing, and extent of further audit procedures. Okay, simple 3 points answer. Now after that, we have done this part that is evaluation of internal control by the auditor. How will the auditor obtain the data or assimilate data in relation to internal control? So in that case, we had flown check, that is flow chart, narrative record, checklist, and questionnaire. Now in this, you will also see that in flow chart, narrative record, checklist, questionnaire, you have the some MCQ related questions can come, which is the most concise way of presenting something. That is flowchart, which is the graphical representation of the matter. That is again flowchart. You had another question which can be, which is the most widely used method to obtain information. That is your questionnaire. Okay, so you have to remember this in a proper manner and you have to read it carefully. Okay. Next is in relation to, sir, what are the benefits of evaluating inter-control? In this, we have done the Sare Jahan Se Acha song. We have done this. Okay. So management is discharging its functions. Errors and frauds are to be located. Effective internal auditing. Adequate internal control system. Control is weak. Extent and depth of the examination, reports, records, and the certificates. Administrative control has a bearing on his work, his work. Sare jahan se acha. Then controls adequately, safeguards the assets, appropriate, audit technique and audit procedures, worthwhile suggestions, suggestions. That is how the song goes. Okay. After that, we had done the next area. That is after this. Then I told you to do the reading of two parts, which are very simple, which are just a second. That is these two. So you have to remember these two, that is formulate the audit program and after understanding internal control and testing internal controls. So these are the two areas that I told you to read. Okay, that completes a very important part for us called as very important called as risk assessment and internal control. In that we had done the risk circuit, control circuit. Okay. Now you go to the next answer, which I told you, that is components of internal control. As you know, we have the 5 components of internal control, and that is control environment, control activities, risk assessment, information system, and communication. And finally, you have monitoring of control. So these are the 5 areas that we did. Now let's do it one by one. What is control environment? Basically, control environment is nothing but the top management, how they run the organization. The auditor has to understand the control environment and see whether they have culture of honesty and ethical behavior, appropriate foundation for other components, if they are laying it properly or not. All these things we'll check. Now in this, when you do it, we had this chart which was here, and you need to understand the flow of this chart in a very nice manner. Okay, and I think you have this chart drawn in your book also and in your notebook, so ensure that this is revised with me properly. So let's go for it, please. Here, let's see this. First is control environment. First area is, sir, what is control environment? Let's go for it. Control environment is whenever the PCLOG and the management with their attitude, awareness, action set the tone of the organization. Correct. Second is what are the elements of control environment? So this is basically, sir, the TCWG, we look at their rise. What is their rise? Sir, in rise we have the what kind of involvement does a TCLOG have in the entity? What kind of stature and experience they have in the organization. Does the TCLOG keep itself independent from the management or not? All these things, when we check, it is basically your control environments, TCLOG's work. So in this we had done this Mukesh Ambani chart, if you remember. Okay, so this is the TCLG part. So TCLG has to do what? Rise, correct? So raising difficult questions, independence, involved stature and experience. Okay, after that we had done, sir, the management operating style. That was in relation to, so the management's operating style should cover three things. That is your business risk, accounting and processing, and finally financial reporting. Sir, for the management, two things are very, very important. That is integrity and ethical values. Also, the management should be competent. Sir, it is very important to that they should have authority and there should be proper segregation of authority and responsibility, and it should be properly aligned. Okay, with the HR policies and practices are very, very important in every organization to motivate the people who are working at the lower level, and this is also decided by the top management. And finally, organization structure becomes very, very important. Okay, before they are planning, operations, controlling, execution of the work, this becomes very, very important. Okay. Next area, sir, in order to assess the risk in relation to the control environment, what should the control environment do? What should the top management do for risk assessment? So for this, they have said here, they have to first identify the business risk. Identify the business risk. We have to look at the significance and the likelihood significance. I've given you here how much damage it can cause. And the likelihood is the frequency, how often it occurs. Okay. Then after that, we'll take actions to address the risk. We'll also do the risk assessment process and procedure. And finally, we'll apply the risk assessment procedure and see whether it is appropriate or not. Okay. If you have done this chart in the class with me, even at least once in the class, if you have paid attention, this area will be a cakewalk for you. It will be a very simple area. Okay. Now that completes this part. That is in relation to your control environment and risk assessment. So control environment is done, and this risk assessment part, this answer we just did. Okay. Now let's go to control activity. In control activities, we had done some examples of specific control activities. If you have not noted down the code, please note it down. It was a recently made code. So by chance, if you don't have, you can just copy it. Okay. We have a code called ASPIN. Okay. ASPIN is nothing but A is authorization, S is segregation of duties. Then after that, with P you have something called as physical controls, and with IN you have information processing. Okay. So now let's see this. I'll just show you where that area is. So because it's a recently made code, it is possible that you may not have written it. See, a spin. So you have authorization, segregation of duties, physical controls. Correct. You also have performance reviews, and finally you have information processing. These are the examples of specific control activities. Remember regarding this part, a spin. Okay. That is basically this code is written here. You can check a spin. Okay. Now in this we had done one more area. I'll just take you there. Just a second. Okay. Next is control activities is we have to check to assess the risk of a misstatement. Assertion of transaction account balance disclosures which auditor finds relevant. The auditor should check those controls mainly. Policies and procedures are set by the management, so auditor should check that. And finally, activities of IT or manual system, whether that work is being done, that control is being done using IT or manual system. That is what the auditor should check. Okay. Let's go to the next one. That is your information and control communication system. Now, in this case, we had done, sir, in auditing, auditor is concerned with the financial aspect of the company. So auditor should check what? Auditor should check the transaction, journal entries. Then in the ledger, you will check the initiating, recording, processing, correcting of transaction. Then after that, you will have information system that captures the events. And finally, financial reporting you will check. Simple. This is how it flows. After that, we had one more answer that is, sir, the auditor should, one more answer, it was a continuation of this answer only, but it can come as a separate MCQ question. So please see here. That is basically this part. Auditor should obtain understanding of information system, how the entity communicates, roles and responsibilities. It can be through manuals or by email or orally or management's actions. So this is the way the controls will be, the auditor will ensure that will obtain understanding of the information system which is there in place. Okay. Let's go to the next area. That is this. See, major activities in relation to the monitoring aspect of it. So whenever the auditor monitors any internal control, so how or the management of the company monitors the internal control, what will the auditor check regarding the management's work? So auditor will see the definition of monitoring, which you know very well. It is a process to assess the internal control. So monitoring of internal control basically means the process to assess the effectiveness of the internal control over time. That is called as the definition of monitoring. Now, sometimes you do monitoring yourself only. That is called internal monitoring. That is during your ongoing activity when the work is going on, or after the work is done. That is called separate evaluation. Or you can come to know about some issues in your system by some outside party. That is called external monitoring. You have your customer complaint, complaints from regulator. All these things come in this part. And last point is assessing on a timely basis and taking what remedial action. See, just by monitoring and knowing the issues in your system doesn't help. You have to work on it and take remedial action. That is this part in relation to your components of internal control. Very, very important area. Okay, so Till here, I am going to call it as the part one of the revision in relation to risk assessment and internal control chapter. I'll upload another part called as part two, and I'll give you more details regarding the same. Okay. Ensure that you're liking the video, sharing it with your friends, and just a simple comment. Thank you, sir. I like the revision video, or thank you, sir. This revision was required. Something like that also acts as a big motivation. Okay, of someone who is putting YouTube videos, taking out time and putting YouTube videos, and that acts as a motivation, saying that okay, the students are appreciating and there's good work. I should continue this work. Okay, so please freely comment in the comment box. I'll be very happy to know. I wish you all the best. Study well, and part two will complete this chapter.